Felix here, and we've got a day where literally everything is turning upside down. We have a massive, massive Fed fight on our hand, and I'll show you why the Fed is actually too late. And for once, the brilliant man in the White House is actually right on this one. We'll also look at whether it is time to jump on the short squeeze in small caps. The promised small cap rally seems to finally be basically there. Before you buy that, make sure you wait till we get to that segment, because there's some key levels you need to look at. And I want to explain to you why bad news is actually good news right now. Got a lot of stuff going on there, trade tariff disputes, all that stuff. And also the AI rally is creeping back very slowly, and a lot of people are missing out on that very, very, very simple investment path right now. And I want to make sure you're not one of those people. In fact, I want to do one better. As I'm sitting here at yet another hotel, anybody who can guess where I am, you'll win a cookie. If you actually want to know what to buy and not just chase the latest thing, whether it's the CrowdStrike collapse today or HPE, which is exploding, or whatever opportunity you see out there, if you want to get rid of that FOMO and replace it with the actual rules that Wall Street uses and has been using for like 5 decades, then, well, come and learn them. And I suggested the other day where you could maybe kidnap the CEO of a major bank and find out that way. That probably isn't a brilliant idea, and what would be a little bit easier if you came and joined me and about 1,000 other people who simply want to retire earlier, retire better, and join us on Saturday at 10 a.m. New York time live for some proper education, which you should have been taught when you were like this big. So the link's down below, felixprehn.org/webinar. I'll pin it into the chat as well. And actually, I pinned one from Steve into the chat, if you can see that. He wrote, "In January, I retire. Mostly thanks to Winston for teaching me how to properly invest." And Stephen, nothing makes me happier. Congratulations. I hope you have an amazing retirement that is amazingly better than your life has been so far. And that you keep enjoying the investing journey, and it'll keep making you freer and wealthier, because you know how it works, right? It just gets better and better and better and better if you keep following the system. So a huge congratulations to Stephen there. Let's give Stephen a round of applause. Just put some Stevens or some S's in the chat down there, and I'll share my screen with you while you guys are doing that, because there's nothing that makes me happier, honestly, than seeing people win, because they are actually learning and they're applying the proper rules. So stream seems healthy on my end. Yeah, congrats, Stephen, there. You see that coming in there? SS. Stephen, seriously, it's amazing. It's just such an... The turnaround is so beautiful to see. That's why we do what we do here. So this is what we're going to run through here, the Fed policy fight, as well as, look at all those S's there, Stephen. I hope you're still with us. The Fed is too late. Small caps, that's a big opportunity potentially. The bad news being good news, and then the AI rally. And then, of course, we'll do a nice, big, juicy Q&A and look at your favorite tech stocks if you wish. Stick around. And if you see some value in that after you've put all the Steves in there for Stephen, put in the V in there for value as well. This just out from Donald J. Trump. ADP numbers out. ADP is a private company that collects jobs data, and he's saying basically that Powell is too late, and he has a point. Let me show you the data and what this actually means, because it's not just about random data, it's about how does this impact my investing portfolio there. Loving all the congratulations there, guys, to Steve. And Steve, I hope you feel how big a deal this is going to be for yourself and your family, what you're doing there. So we've got the ADP jobs data in at these levels, which is like the lowest level since the March 2023 dump there. So it's pretty low, and it just means that we're not generating private jobs in the US. And this data is typically not manipulated because it's actually a private company. It is coming from the government. And what is the government doing about it? Well, the Fed's doing nothing, absolutely nothing. You listen to all the Fed presidents and they're all saying, we've got no real interest in doing anything. The data doesn't tell us to, which is pretty weird. Actually, I'm coming around to that idea because they cut interest rates before the election when inflation was way higher and all the economic data was pointing in the direction of don't cut. and now the data is way worse and they're not cutting. So it makes very, very, very little sense. I appreciate all the V's and all the congratulations there to Stephen. Literally absolutely brilliant, Stephen. So come and learn what Stephen has learned and what Stephen is learning. I pin it to the chat here right now, which is felixfriends.org/webinar. You can click on that and you can grab yourself a free seat over there. So what is the US government doing about it? Well, they've just done something that the US has never done before. They have bought back $10 billion of their own debt. That is the biggest buyback in US history. So what does that mean? Well, the US government is basically saying, anybody who owns my debt, I'm going to buy it back. And that is essentially money printing. Now, usually the Fed would do this, but the US government is doing this, which is sort of odd given that they're running this massive deficit, but they're basically trying to help out the bond market so it doesn't completely collapse. And you can see it here. They've been doing a fair bit of this of late, but this is the biggest one, the bigliest one, as it's officially known, that we have ever seen. So it's kind of an interesting one. So let's move on past that and actually look at some opportunities. And I also want to show you, we look at CrowdStrike, we look at HPE and a bunch of other ones that are moving bigly today. Now, this is the Russell. So ticker symbol IWM usually for most people. Let me get a pen. IWM. There are others obviously that track it, but what do you see here? Can you see that? It's nicely that pattern. What does that look like? No rude comments, please. But the left thing is a shoulder, and then you have a head down there, and you have a shoulder on the right, and an upside down head and shoulder pattern. So normally we see it often that way. Again, I don't want any rude comments in the chat here. This is a clean channel, mostly. And when they're upside down, it is probably the most potent pattern that we see for a breakout signal. So is it a breakout yet? Well, let's have a look at a stock chart, and I'll pull one up here for you in Trade Vision, which is, as you know, the software that we build to give you guys the best stock and options data. And if I type in IWM here, you can see that, right? You can see that pattern here. So what do we look for? Well, very simply, we connect the armpits. We draw a line from one armpit to the other. And then if you break out above the armpit, that's your breakout. We're not quite there yet, but we are almost there. We are really, really, really close, as you can see here, right? Really, 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 really close, which is brilliant. So give us 210 or something like that, and we potentially have that breakout. Now, if you're a little bit more cautious, you will notice we're still below the 150-day moving average line here, which is a purple line there, but potentially this could get very, very interesting. Options might be a way to play that, which is a lot lower risk, but we don't need to get into the super details of that. But for you option goons out there, have a look at that. They're relatively inexpensive. And I'm not talking to buy a call option. I'm probably talking about a spread or something like that here. It looks like Winston. It does a little bit, doesn't it? It does a bit with the ears. You mean we should just call it the Winston, right? Left ear, Winston's head, nose, right ear. Yeah, that would work. That would work too. We'll call it the Winston from now on. So that's something to definitely watch, because small caps have absolutely underperformed absolutely everything else out there. And they're still, how much are they down from the all-time highs here? 14%, which is pretty significant for an index. That was the all-time high, wasn't it? I think so. So that's definitely one to watch. Now, I promised you some more, didn't I? And we'll look at those in just a second. And is that useful to you, by the way, to like look at a pattern like that and go, okay, this is what people look for. This is sort of one of those rare patterns. And I'm not somebody who kind of goes out there and spots random patterns and, you know, cups and saucers and, you know, aliens and giraffes and that sort of thing, what some people do. But this is the one that I do actually look for. And this strengthens the case for this very, very, very significantly. Why? Well, let's ask the 2,300 people who have not hit the like button yet. Clearly, there is no value in the stream whatsoever. So why are you here? Ask yourself that. It's always a little bit like that, isn't it? Okay, we're getting some yeses there, useful, and some use. Okay, brilliant, guys. I love that. So this is short interest for the Russell 2000, which are the small caps. And as you can see, it's at pretty bigly levels, right? That is the new adjective that we use. 5.5%, that's pretty high. Like, we've not seen anything like that in the last, well, I've got data going back about 6 years here. So that means if it does go up, what do these people have to do who've shorted the small caps? Well, they're losing money when the small cap stock price goes up, and therefore they have to buy it. Why do they have to buy it? Because they've sold it. Short means you've sold it. The only way to close a short position is to buy the actual stock, which then drives the stock price up even further, which means everybody else who's short is now closing their positions, so they're buying it. So it causes what we call a short squeeze, potentially, right? But I would wait for that little line at least to be triggered, possibly even close above it, and then you gotta ask yourself whether you want to buy stuff below the 150. That's a whole different story. But it's starting to look very, very interesting, certainly on my watch list as of today. Now, anything else? Yes. The Donald has been rather active tweeting. He also tweeted this. He said that the president of China is very tough and extremely hard to make a deal with. And you would expect the stock market to go, all right, the trade war will continue. This is a problem, right? The tariffs will stay in place on China. They'll go back up higher in 35 days, whenever that is. And therefore, you'd expect the market to drop, because last time these tariffs were announced, the market absolutely collapsed. But have they? Well, the easiest way to look at that would be just to look at the VIX, look at the fear. Is the fear back? Well, it's trading at 1768. That is the lowest level of fear we've been at for, well, May 16th, in fairness. But we're basically back to below March levels, right? We're back to pre-Trump scares the bejesus out of the market levels, right? So pre-Liberation Day levels. So the market is accepting that tariffs are not terrible. And that's a huge freaking change, because it means even if we don't get trade deals, or we get terrible trade deals, the stock market isn't going to collapse, right? Do you see how important that is? Do you see how, like, that is a realization, which means we're probably not going to see a massive drawdown again anytime soon. I still think we're going to see choppiness, you know, when these deals don't fall through, and if in 35 days there are no trade deals, I think we're going to go down somewhat. But I don't think we're going to see the same level of sell-off again, because the fear is just simply not there on a day like today. Like, we're down on the VIX, which is the fear index, on a day like today, which is just extraordinary. Taco Bell, that might have something to do with that. Yeah. But let's see, right? Let's see if there's no deal. Is Trump going to be tough, and is he going to, you know, put in 50% tariffs on all the Chinese stuff and just leave them there, right? He can do that. And then what happens? Well, Apple is in trouble, for example, right? Lots of tacos there. Oh, there is an emoji for Takis, which is absolutely brilliant. Fantastic, guys. We got up to 600 likes. That's probably a record 15 minutes into this stream. So thank you very much for that, guys. Let's see if we can smash that 1,000 like limit there today. Now, why am I showing you Hewlett-Packard? Because Hewlett-Packard is about the most exciting brand in the world, isn't it? It's sort of about as exciting as plain cold tofu. But it is an AI stock. Yes, it is, because it's the enterprise stock. HPE, there is HPE and there is HPQ, right? Which is the consumer side. And it is up a bigly 7% pre-market on beautiful earnings driven by AI demand. And this is important because we were expecting this last year. Remember last year I was telling you we're expecting this replacement cycle on hardware, computers, mobile phones, laptops, the whole thing, server racks, all that kind of stuff. And it just didn't quite come in. It came in a bit slowly. And I think the reason it came in slowly is that NVIDIA couldn't satisfy the demand for its chips. And maybe people were also waiting for the Blackwell chip. Now that that's out there in full force, this is a beautiful thing. We also have Wall Street saying today that they think the NVIDIA revenue pipeline is, wait for it, $1 trillion. Anybody have a furry free cat to hold? $1 trillion revenue pipeline, which is just extraordinary that they would be able to bring in that kind of revenue. So the demand for AI is clearly through the roof. We're seeing it again and again and again with the Microsofts and the Googles and the Amazons, and now with HPE. And that is very, very, very good news for the market. And NVIDIA is grinding slowly up another 0.5 percentage point, 0.59 percentage points here today, back to pretty much the highs after earnings. So the market got a little bit scared, but it's back. There's also a rumor out that Donald Trump has allowed an adjusted version of the, what is that chip called? H20 or something, the sort of slower version of the Hopper, that they're allowed to export that to China, which would give NVIDIA back, I don't know, what is it, 5%, 7% of revenue or something like that? Pretty significant from an NVIDIA point of view. So that makes me feel a lot more bullish. Now, before somebody jumps up and down in the chat and goes, but what about AMD? Well, my friend, right now, right here, right now, AMD is above its 150-day moving average line for the first time since 1683, which is about the time that this hotel was built up. But no, in all seriousness, that is the most optimistic we've been on AMD for a long time, right? So is it a buy? That's really up to you. It's arguably one. I mean, there is a high a little higher here, but it is arguably a buy at this price point if you like AMD, right? Is that helpful? Does that sink in? Does that sort of make some sense on the where we're getting back to with the AI thing? So essentially, all the fear and FUD that the Wall Street analysts and the little cubbyholes were spreading, that there really was no demand for AI chips and that it was useless and it was about as good as a toaster, is kind of BS, isn't it? And people actually are using AI and it's actually providing real value. So it's pretty cool. No volume. Yeah, the volume isn't brilliant. It's true. There's not a great deal of volume, but I think, thank you very much. You said that. Dave, you're spot on. So what Dave is saying there, and let me show you that on the chart, is that as we're moving up here, let me move that over here, and get a little pen here for you. Can you see the volume down there is doing nothing? So on a real breakout, you kind of want like a big volume candle. We haven't seen that yet. Now, the other thing you could check in Trade Vision, and if you want to play with that, get yourself a free trial to it. We see every day the bullish and bearish flows of institutions. And we can also filter into the actual trades. So we could type in here in NVIDIA, but actually we want AMD, don't we? AMD. And then you see into the dark pools, you see the big institutional trades, and you see that they were actually very bullish yesterday. Hang on, 27th of May. Why is it 27th of May? That's a bit weird, isn't it? Let me change that to 3rd of June. Slightly bullish. So not that bullish, just a little bullish. What was the bigliest trade yesterday? It wasn't very big. So doesn't convince me that the institutions are buying this hand over foot, because you'd be seeing some bigger premium orders, a couple of million or something. You're only seeing hundreds of thousands, which appreciate is a lot of money, but not that much money if you're on Wall Street. So if you want to keep an eye on that, then get yourself a free trial to Trade Vision. Link is down below, felixprehn.org/Trade Vision. Check out Lemonade, check out Hood. What about Google, AMD, Raffles? That's not far off, my friend. It's a pretty good guess. Same brothers, different hotel. Does that give you some clue? I think it might, at least if you've traveled around this part of the world a little bit, or you might live around here. Felix has a ghost in his room. His lights are flickering. Probably. This hotel is built in, I think, 1865. So it's probably fair to say that there are a few ghosts in here. It'd be weird if there weren't. Krista says, Felix, you're changing lives for the better. Thank you. Appreciate that. That's very kind of you. That is literally why I do this and why I go live even when I'm on a trip, because I actually genuinely enjoy it. This is super fun. All right, so let me give you some bad news then. CrowdStrike, well, earnings were an unmitigated disaster. Well, they weren't really, but we missed a few things, which isn't brilliant. So EPS actually beat, but I think revenue missed and a couple of other numbers too. So we are down 7.6% pre-market. Now, of course, CrowdStrike investors will say to you, 7.6%, you call that a drawdown? That is nothing. We are used to 34%. And that here is, that sort of double bottom there is quite a powerful one. And yeah, is that a head and shoulders? Arguably, right? Can you see that? Arguably. They don't have to be perfect, by the way, but something like that. And then here was your line. Here was your breakout buy. And you'd still be up 12%. Maybe you bought a little later and you're not quite there. But yeah, so we'll see what happens there. I mean, the pullback at the moment is essentially back to the recent highs. So it's not like a complete collapse there. We'll see what happens there. I saw some analyst ratings that were actually quite bullish on this one. They thought it was overdone. Doesn't mean it is. I have a stop loss on this, as I have on every position. Oh, you can't see the screen. Sorry, guys. Apologies. There it is. CrowdStrike. I just wanted to give you a feeling of what it would be like to be blind. But yeah, here was your market bottom, and here was your, well, probably there sort of buy signal. I have a stop on my CrowdStrike position like I have on every single stock. And if it gets triggered, it gets triggered. I do not adjust it. I do not play with it. There is never an exception. There is never a, but today is different, or this one is a recover. I'm sure it's a good stock after all. I love the CEO, or, I slept with the CEO, or whatever it might be. No, okay, that kind of insider information might be good reason enough. But if you haven't done that, then keep your risk management in place, my friends. That's always the key thing here. Righty ho. So screen. Yeah, that's how we get some engagement going, isn't it? Stop showing the screen. No, well, when you're only on, I've only got two screens here, so I miss it when I'm traveling. Now, what did we miss before this? What we wanted to look at. Some of you were shouting hood, and yeah, look at that, all right? Where was the breakout? The breakout was here, right? And how much higher are we now? My breakout friends, we are now bigly higher. 40%, something like that, right? So that's the kind of investment that we look for, is these kind of strokes. And it's not a question of hindsight. No, it's simply a question of foresight. So we set up all of our trades on a Sunday, and then if the pattern that we look for gets triggered, guess what? We make a lot of money. And anybody recognize my friend here? That one? You recognize that one, yeah? I think hopefully you do. So you learned something there, did you? Can you see it? Can you starting to see how this becomes useful, especially when you're up 40%? Dollar General. And this is one of those boring stocks, right? When did we get into Dollar General? It was a really long time ago. I don't remember. I think, where was it? Where was it? I think I should have put it on the chart. Was it down here somewhere? My feeling is it was down here somewhere. Was it? I think so. I think it was somewhere down there. I can't remember. Somebody maybe will remember. But either way, we're up very, very nicely. Gapping up here after yesterday's marvel once again. This looks very, very, very good. So boring stocks can make you lots of money, right? So from that point onwards there, wherever that was, you'd be up 34%. on, you know, the latest AI stock, real technology that's driving the future, Dollar freaking General. We can make money with anything. We just got to look for the right patterns. We just got to have the right risk management and follow the freaking rules. And you do that, magic happens. Who wants to find these kind of stocks on a Sunday? Easy. Set it up in advance. You only buy the things that are going up. You have a stop loss. You never need to think about it. You never have to worry about it. You never have to ring a friend whether you should buy or sell or hold it. You will simply be able to look at it and go, yeah, I want that. No, I don't want that. Do you want to have that kind of clarity? If you do, you know what you got to do, right? You got to join me on Saturday at 10 a.m. Eastern time, because that, my friend, could literally change your life. Like Stephen here at the beginning of the day, who's retiring because his money is not working for him. Money is the best business. It's the best job you'll ever have, because it takes you a couple of hours a week, doesn't complain, it doesn't ask for overtime, it doesn't have a nasty boss, you don't have to commute to it, it doesn't have income tax consequences. It's just the most brilliant thing you could ever do. And I've done a lot of different businesses. Nothing works as well as money. So who's going to join me on Saturday? Put an S in the chat and I'll look forward to seeing you there. And if we have a look at pre-market, it looks pretty gray, doesn't it? Looks pretty gray, but actually everything is up a little bit. Meta, Google up 0.3, 0.4, Nvidia 0.6% up, Tesla 0.4% up, the fatties are up 0.4%, sorry, LLY, Amazon 0.3%. Everything is kind of up just a little bit, which is extraordinarily bullish if you think about that Trump started the day with it's incredibly hard to make a deal with China, and we have jobs data that is pretty appalling, and a Fed that is not doing anything at all to prop up the market. Extraordinary numbers we're seeing here. Why so gray? Well, it's just like small movements, basically. Small movements. Okay. Loving all you guys for joining me there on Saturday. Linda and Dieter and Lewis. Annette S. Edward's asking, why are a lot of institutions still mostly in cash? Well, they're not in cash. They're in treasury bills. So they're collecting 5% with zero risk. And for the kind of money that they have, that's pretty good. You got $100 billion, you get 5%, you get 5 billion guaranteed. That's not bad, right? So that's why they're doing it. It's like, it's diversification ultimately. See you Sat, Tony. Brilliant, my friend. Cheeto, my friend, you're learning 2 weeks in. That's probably the tough spot about 2 weeks in, because you're starting to realize all the things that you don't know. you know how a learning curve goes. You basically start out. Let me draw a little picture for you. So this is what learning anything looks like. You basically start out here, and you have what would be the word? You're oblivious, I would say. You're oblivious to what you don't know. So you feel quite happy, actually. You feel quite happy. That's meant to be a smiley. And then your happiness level goes down a little bit, because you get to like the sort of bottom, which is probably where you are right now, where you're like, I know little, because you've suddenly realized all the gaps in your knowledge. And that's when it starts to get better. And then that's ultimately where we get to, like, you know, happy chappy, because that's meant to be a smile, because at that point, you know, cha-ching happens. So you kind of got to go a little bit through the trough with anything that you learn. It's literally just like that. You sort of start, you're excited to whatever it is that you want to learn, and you're like, this is a little harder. Like you learn a sport, you're like, brilliant, and then you hit the ball and you're like, frickin' hell, this is hard. I have to do this how many times? You know, that sort of thing. That's really just the way it works. So Chewy, we are in Chewy, of course, thanks to Winston. And Chewy is looking pretty good, isn't it? I mean, it's looking very, very nice. Very, very nice. Cheetah realization there. Yeah, that's the way it works. That's the way it works. And it's just part of it. So it's a little bit psychology. Just ask us for help. Like that's what we're here for, right? So just ask for as much help as you need, my friend. And we'd be super happy to give it to you. Unknown unknowns. Exactly. if you don't know what you don't know, then you're usually quite happy. Being ignorant is quite a happy place to be. But when you realize what you don't know, and that there is a lot that you don't know, then you temporarily feel a little bit miserable, and then you learn those things, and now you get to a real place of just confidence and happiness, which is what happens to everybody. I mean, talk to Steve at the top of the chat there. When you look at Okta, let's have a look. Okta. Well, that gap down there was pretty hideous, wasn't it? And continues to be, my friend. It's not pretty. It's not pretty at all. What else have we got? We've got look to where you say, see you Saturday, brilliant, my friend. NATO summit, well, they're probably going to spend more money on arms, right? Could bring a bunch of military people together and say, what would you like to do? We'd like to buy more guns, please. That's basically what happens over there, right? Graham is still threatening to enroll you into the French Foreign Legion if you don't smash that like button. Thank you for that. Meta Planet, how's that one doing this morning? Which is that Japanese restaurant business that we like, turning themselves into a Bitcoin business. That's still looking, well, that's Tempest. MTPLF. There it is. That is up 16%. That was Tuesday. And it's today at the very top end of that base closing price. So we're looking pretty good here, right? Pretty nice gap up here from that. What about OpFi? OpFi. Let me leave this here. And that looks good, doesn't it? So where was our entry? Judging by that line, it was somewhere down here. So 28% up. Not bad, right? Ding, ding, ding. Yes, we didn't bring a bell, sadly. That's probably one of the real things. But we do have some pretty quirky stuff around here. We've got this chap. I'm not sure who he is, but he looks serious. We've also got perhaps that chap's hat, which I'm not going to put on, crikey, because, you guys started talking about ghosts. But yeah, we have some fairly unusual things in here for some reason. Anybody know what that is? I have no idea what that is. Some sort of uniform, obviously. But I distract us from what the market's doing. OpFi is looking beautiful. Is Archer a falling knife, or is it a second chance? ACHR even. ACHR is the ticker. Let's have a look. ACHR, if we may. Well, it's up 1.2%. It's, well, the second chance was here, right? And that dropped below that. So that isn't brilliant. Now, we're still, and that's always important, we're still above the 50-day moving average line, which is this line here, quite significantly. But at the moment, well, we're still above that sort of box here, still above that high, but it doesn't scream buy me at this level unless you really, really, really like Archer, because then it's a nice pullback, which you could do, and then you could see if it bounces off the 50, and if it drops, if it closes significantly below the 50, then that would be the, the parachute sort of level. But obviously, I'm not giving you advice here. I'm just giving you what the options might be that you might wish to consider. What happened to HIMS? Actually, HIMS is an interesting story, because yesterday it fell like a rock, right? Like really, really extraordinary drop during the day. Actually, from the very top of the day, it dropped 18.7%. And there's a little story to that one, because if you look at the dark pools for HIMS, at least one of my guys told me this. I haven't checked it out myself yet. For Monday, look at that. It's very, very bearish on Monday. Not a huge volume, but significantly bearish. So did somebody know something? I think that's always the kind of question, right? And often this is a little bit of a telltale sign. We had this also before the Nvidia earnings, we saw some very, very positive bullish setups here from the institutions in the options market. So if you want to spy on the institutions, just play with it for a week. FelixPrehn.org/trade vision. It's a zero risk trial, and you can see if you get some value out of that. But yeah, it's a little fishy when I see that data, I must say. Tesla. How many days till Robo-taxi day? It's meant to be the 12th of June, isn't it? That might be the day when it sells off harshly. Unless Elon surprises us with the scale of that venture. But at the moment, it's just doing nothing, right? It's just literally trading sideways in the same box that it's been at for a while here. So it's just an exhaustion sort of thing. It's neither good nor bad. It's just nothing really. What else have we got? Him said to pay child support to them and theirs. What is Zim? Yeah, that's not looking. Hang on. There was another dividend here, right? How big was that dividend? 74 cents. So that would explain some of that drop. Because you got to look at these dividends, because some of these are really bigly. Like this one was $3.17, right? So if you drop from 17 to 15 and you paid a $3 dividend, then that would explain the drop. This is a smaller dividend, so they have a little bit of a drop, but it's moving up again. It's still refusing, though, to break through the 150. So that's the problem for me. People have actually made money on this, good money on this, because you've now collected $4. So you've collected about 25% in dividends, but the stock basically hasn't moved. So, see what happens. What happens when after hours the gap goes down through your stop? It's an interesting question, Cape Mac, and it's one that I probably get asked the most. So what happens? Well, you get stopped out when the market opens at the lower price. Not brilliant, but honestly, it happens so rarely. And say it happens once in 500 times you own a stock. It's irrelevant. But a lot of people say that to me, and then they say, therefore, I'm not going to set stops because I don't want that to happen. I'm like, so you don't wear a seatbelt because you're worried it might fail you. Yeah. So 99 times out of 100, it's not going to throw you through the windscreen, but the one time it does, you'd be mad at the seatbelt and therefore you're not going to use it, right? So we set stops on absolutely everything. And there will sometimes be this freakish incident where it drops through it after hours. Can you avoid it? Well, you could not own it around earnings. You could sell your stocks before earnings. That would probably eliminate 90% of those cases. So now it's probably not 1 in 500, but probably 1 in 1,000 or something. So it's pretty irrelevant, honestly. It's pretty relevant. And then the second thing, the way we diversify. So, I would, if you're a little bit more active in the market, like how many positions have you got open? Say you had 30 stocks. So each stock is, if I could spell stocks, is 3%, right? So say your stock drops, 10%? How much is your drop? Minus 0.3% of your portfolio. Again, pretty irrelevant, right? In the scheme of things. So if you practice good risk management, no single stock will ever wipe you out. No single stock will ever have a significant negative impact on your portfolio. That is one of the things that I'll promise you if you join me on Saturday, felixprehn.org/webinar. Here it is. I put it in the chat for you again, so you guys can sign up for that. And we're literally going to walk through that. I also want to walk you through a little bit of a bonus there, because I see a huge opportunity at the moment in gold. And I want to walk you through that a bit. and the gold stocks that I'm actually buying and why we're buying those specific gold stocks, so that you don't just walk away with a random list. I'll give you a list, but you'll actually understand why. So if you come and join me on Saturday, that'll be a little bit of a bonus thrown in there for you. If that will be useful for you, write gold or a G in the chat, and that way I know that you're going to be there and you're going to be joining me. Pamela, you have 12 positions. All right. So each position is, what, 7% in size? So if the stock drops 10%, you're down 0.7%. It's just about average move of your portfolio on any given day anyway, I would imagine. So it's still not gonna wipe you out. Okay, I'm seeing some G's there. See you guys, all the G's. See all the G's on Saturday. Bonus, brilliant, my friends. So I always want to give you guys a little bit more information every single week, every single day, and that's really my goal. Get you guys to a level where you have confidence, but ultimately you're going to have to take a bit of action yourself. Like, just listening to me isn't going to quite get you where you want to get to. So you have to actually sit down and learn and study, and we also talk about that on Saturday if you join me there. One of my commodity stocks jumped 7% today. That's pretty good, isn't it? If it jumps up, we don't really complain about that. Do you often work from the chart rather than always the ROI, says Jen there? Yeah, it's a shortcut. I mean, I think it's still good to look at the underlying numbers. It might help you from getting into some, really dodgy stuff. But generally speaking, the combined wisdom of the market will tell you most of what you want to know. Is that your home? No, it isn't actually. This is a very nice hotel suite in Malaysia, which is where we still are. It's a lovely place. It's sort of a really old colonial thing that very nice hotel. What do you think about Wells Fargo? Yeah, some good news there. Wells Fargo is no longer in the naughty corner, which means they will be allowed to basically grow again, and that could give Wells Fargo a sort of nice path up to actually growing again. Stocks jumped up 3.5% here, which is good, but still not past its February highs. But yeah, obviously looking pretty positive there for those guys. Majestic. It is rather majestic, unless you meant the Majestic Hotel, which it isn't. That light is trippy. Is it sort of flickering? Is it flickering? I can't really see it on the screen. It might be the ghost playing with us. MSTR, what do you think about it? Well, I used to think it was a basket case sort of Ponzi scheme. That was my first impression. Then I listened to an interview with Michael Saylor for about an hour, and the man knows derivatives like very, 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 very few people. So that means they actually know what they're doing, which is quite cool. So it's a very good business. Now, it's a pretty sizable business at this point. It's $100 billion business, so it's not going to it's not going to 10x anytime soon, if you know what I mean. Which is why I said a little while back, I'm buying a little bit of Meta Planet instead, which is the same business model, just a lot smaller, really, with some tax benefits as well. But I like it as a business strategy. I mean, if you want to get crypto exposure, then MSTR to me makes a lot of sense. But that doesn't mean you should do it, because it's definitely risky. It's definitely one of the riskier things we could possibly be buying. The light is pulsing. Okay, brilliant. Michelle, okay, thanks there. You're quite right. Very, very majestic. I like these kind of places. Would it be astute to include the 20-day DMA? I don't think it would give you any benefit, but you may play with it if you like. Stephen says, have a swell day. T minus 6 months until freedom for me, Stephen. That's so cool. Isn't that nice? Stephen there with our #1 crown in the chat is retiring in 6 months. Thanks to his money, making him money. So Stephen, Congratulations, my friend. You deserve it, and keep doing exactly what you're doing. And the only lesson I would kind of give you, which is what I've learned, well, from my mentors and also the hard way a few times, is especially when you're doing really well, stick to your rules even more than ever, because overconfidence is the one thing that kind of kneecaps us from time to time. So we just want to make sure risk management, just check it. Just check it every week. Make sure everything is dotted and you know, T's dotted and that sort of thing, if you know what I mean. Now, well done, Stephen, says Michelle. Absolutely fantastic job there. Metaplan is a $500 billion stock, maybe in yen, my friend, maybe in yen, but not in US dollars. We'll say hi to the ghost. Brilliant. Yes, rules über alles. Exactly. That's it, my friend. Do you have a position in AVGO? No, I don't think I do. I don't think I do. Somebody, what was the other thing out there? APLD. Applied Digital. Ooh, that's a nice one. That's a very nice one. Yeah, that's a classic sort of breakout thingy-majig, isn't it? Nice gap up, and then it keeps going and going and going and going, taking out the all-time high from Feb 2025. So yeah, looks good. Just obviously very extended by now. So again, obviously better to get into these things with a bit more automations. Which is yeah, looks good. Looks good, doesn't it? I think it looks good. What else we got here? Why is Palantir losing steam? You mean the stock that's only up 10 billion% or something? How much is that stock up by this year? Where was the beginning of the year? There. It's up 73% this year. It's not exactly bad, is it? So it's consolidating. That's what stocks do. Stocks don't go up in straight lines. So I wouldn't worry about it too much. Moo breakout. Can you share dark pool info? Chris says Chris. Chris, just go to felixfriends.org/trade vision. A, there's a free trial. B, it's $19 a month. So just get yourself the access. It'd be a lot easier for you than bugging me with it. EL, a few of you brought that up. Okay, let's look at that as well. Estee and Lauder. There's no and in there, but that's starting to look quite good, isn't it? Yes. That is, isn't it? Is that the Michael Burry play, is it? It's sort of falling knife no more. If we close above the 150, I'd say that looks pretty good, actually. I'm not telling you to buy it for obvious reasons, but yeah, that looks pretty good the way I would look at that. Could also just do something like that, and you'd be, again, in a pretty happy spot. The only issue so far, no frickin' volume to speak of. What about our institutional dark pool friends? Let's have a look. EL, let's have a look at today. Nothing. What about third? Ooh, wow. There's some people are only buying calls on this and absolutely nothing else. Interesting. $1.4 million spent on call options. So that's obviously institutions, right? Nobody does that otherwise. It's a pretty unusual setup as well. So interesting. Estee Lauder. We'd have to have a look at that. Interesting. And I mean, it's come down a heck of a lot, right? It's got a potential runway. If it were to ever, and say it doesn't reclaim the all-time highs, but you could see how there could be a 100% rally in this. Again, I'm not telling you to buy this, obviously, but something worth looking at. What about cake? I'd quite like to go get some, actually. I was thinking about that. A nice bit of dessert would not go amiss around here. So I wish you a beautiful rest of your day, my friends. Make sure you come and join me on Saturday, felixfriends.org/webinar, while we still have spots available. I thank you for tuning in. I thank the 1,100 likes. Oh my God. I'm going to get the feeling that you guys might actually like me, which would be shocking. This head will get even larger than it already is. And I wish you an absolutely brilliant day. See you Saturday. felixfriends.org/webinar. All the best.